What if I told you that you don't need to stare at charts all day or make hundreds of trades a week to make money in the market? What if you could trade just a few times a month and still grow your portfolio? That's the secret behind swing trading, a strategy that works even if you have a full-time job or limited time to trade. In the next minutes, I'll show you exactly how swing trading works, the 3-step strategy that's beginner-friendly, and how you can use AI tools to make it even smarter in 2025. At the end of the video, I'll share one simple mistake that ruins profits for most beginners, and how you can avoid it starting today. Welcome to TechMoneyAI, where we help you invest better with the power of AI. What is swing trading, and why it works? Swing trading is all about catching swings in price, the natural up and down movements that happen every few days or weeks. Unlike day trading, you don't have to sit in front of charts all day. Instead, you identify a setup, enter a trade, and let the market do the work. It's perfect for beginners because it balances risk and reward. You're not chasing instant profits, but you're not waiting years like a long-term investor either. The goal is simple. Buy when prices are low in an uptrend, sell when they're high, and repeat. And here's why it works. Markets move in cycles, not straight lines. Swing traders take advantage of these natural movements. Step 1. Find the right market trend. Don't fight the market. Your job is to identify whether the asset is trending up, down, or sideways. Use tools like moving averages. A simple trick is, if the 50-day moving average is above the 200-day moving average, it's an uptrend. If it's below, it's a downtrend. Once you spot an uptrend, you're looking for temporary pullbacks, small dips where you can buy at a discount. If you're using AI tools, this is where you can leverage GPT-powered trading assistants or data analysis platforms to identify trending pairs automatically. They can scan hundreds of charts and show you only the setups that match your strategy, saving you hours every week. Step 2. Choose your entry and exit points. Once you've identified the trend, it's time to plan your entry and exit. A good swing trade usually lasts anywhere from 3 days to 3 weeks. You want to enter near a support zone, where prices tend to bounce, and exit near resistance, where prices usually stall. Here's an easy example. Let's say Bitcoin is trending upward but recently dipped from $68,000 to $65,000. That's a potential swing entry if the overall trend remains strong. You set your target near $70,000 and your stop loss just below $64,000. That's a clear risk to reward setup. Remember, swing trading is not about being right 100% of the time. It's about making more on your winners than you lose on your losers. AI-based charting tools or bots can help you set alerts for these conditions automatically, so you don't miss an opportunity. Step 3. Manage your risk like a pro. This is where most beginners fail. They find a good setup but risk too much on one trade. Professional traders never risk more than 1 to 2% of their capital on a single position. That way, even if you lose 5 trades in a row, your account stays alive. Use stop losses religiously. They protect you from emotional decisions. If you're trading crypto on platforms like Binance or Bybit, you can automate stop losses and take profits right in the trade order. If you're using AI bots, you can even train them to manage trades for you, adjusting your targets dynamically based on market volatility. The secret that keeps you profitable. Now, let's talk about something almost nobody teaches beginners: patience. The reason swing traders make money is that they let their trades develop. Markets move in waves. Most people panic and close too early. The best traders let the swing play out. Here's a little challenge. The next time you take a swing trade, don't check it every hour. Let it breathe. Check once or twice a day. You'll be surprised how much that one habit changes your results. And here's the interesting part. This patience can actually be taught to bots too. AI algorithms are getting smarter at detecting when to hold and when to close, based on data patterns from thousands of past trades. Common swing trading mistakes. Before we wrap up, let's cover the biggest swing trading mistakes to avoid. Overtrading. Don't take too many trades. Quality beats quantity. Ignoring market news. Big announcements move markets. Check them before entering. No risk management. Always know your exit before you enter. FOMO. Fear of missing out. If you missed a setup, let it go. There's always another swing coming. No strategy. Guessing isn't trading. Always have a written plan. Every mistake above can cost you real money, but each one is avoidable if you prepare the right way. The smart way to start, with the right tools. If you've watched this far, you already know swing trading works when done right. But if you want to make sure you're starting with the right foundation, understanding strategies, managing risk, and avoiding those rookie mistakes, then you need the AI Trading Starter Toolkit. It's a simple, beginner-friendly digital guide that walks you through how to set up your first AI-powered trading system, the 5 rookie mistakes that kill profits, practical tools and bots you can start with immediately. It's only $9.99, and it's the best shortcut to building confidence as a new trader. You can get your copy now at TechMoneyAI.com. Swing trading isn't about luck. It's about timing, patience, and using the right tools. If you follow the 3-step strategy we covered today, stay disciplined, and let AI help with the heavy lifting, you'll be way ahead of most beginners. If you found this video helpful, hit that subscribe button and turn on notifications so you don't miss future videos. And remember, at TechMoneyAI, we help you invest better with the power of AI.